Yes, friends, we'll be talking about the profit and loss account in this statement, in this particular lecture. As you know that we are into chapter number 3, which talks about the income statement or the profit and loss statement. And in order to appreciate the concept of profit and loss account or the components that go into making the profit and loss account, we'll be taking an example of a company which is Reliance Industries Limited, which is the largest company in India in terms of market capitalization. So we'll see how the income statement or the profit and loss statement of Reliance Industries look like, and we'll see how the various components are used or presented in the income statement or the profit and loss account statement, right? So let's start. The first thing, as we know, we have already discussed in our previous lectures that profit and loss account is also called as the income statement. It is one of the financial statements. The others being the balance sheet and the cash flow statement. We did not talk about the change in equity as on date, so I won't be mentioning that. So we'll say it is one of the financial statements like the balance sheet and the cash flow statement. This statement tells you the ability to generate the profits by a company. So what we find out, what is the end result of profit and loss account is we try to find out as whether the company has generated profit or it has incurred a loss during the particular given accounting period. So the line items which we need to understand is the revenue or what we have received and the expense what we have paid. Revenue, as we know, it is generally through the sale of material or providing these services. And expenses means the amount incurred in order to generate this revenue. And in order to find out the expenses, we need to find out what operating expenses are, what non-operating expenses are. And we have discussed this in our earlier class that operating expenses are all those expenses which are, say, cost of goods sold or your selling and distribution expenses or the research and development expenses, which means the expenses which are related to the regular operational activities of the organization can be classified as operating expenses. And non-operating expenses are those expenses which are incurred by the company, but these are not directly related to the operational activities. The examples of that would be interest expense or the income tax expense or the loss on account of foreign exchange transactions and things like that. So what we need to understand is we need to understand these two things, and then we need to find out as to how these two things are to be displayed or how these two things are to be put to use in order to understand the final result of that company. And the step number 3 would be to understand the format as required by the Companies Act in India. So we would say we need to find out only 3 things. This is a 3-step method of finding out how to make a profit and loss account or how to understand that. The first thing is you need to understand what revenues are. The second thing is you need to find out what the expenses are. And then we need to see how these income and expenses are to be recorded or shown in the income statement or the profit and loss statement, right? So let's have a look at the profit and loss account of Reliance Industries Limited. Let's have a look at this. See, this is the profit and loss account or standalone profit and loss account for the year 2022-23 and 2021-22. This is the format which is required to be followed by the as per the Companies Act. So this helps us to compare the numbers for 2 different years just to find out. On the face of it, we would find out whether my sale, my revenue, my expense have fared better than the previous year or not. So this is the reason why we have a comparative sort of presentation of the P&L account. Now, if you look at the profit and loss account in the first session, with the first portion which starts from this and ends here, this comprises of the income. Then if you see the second portion of this would comprise of the expenses, right? Then you have the final portion which talks about the, here it is, just a minute. Yeah. The final portion talks about the difference between the income expenditure and then the tax implications of that. And in order to find out the profit after tax, we would have to we are required to adjust the tax expenses and the profit or loss from continuing and discontinuing operations also. So this is how the income and expenditure of a typical company like Reliance Industries Limited would look like. Now let's see what are the various components, or let's try finding out the different components of this organization, right? First, talking about the revenue. If you look at the revenue, this revenue which is mentioned here, 5,65,347 crores. This all the amounts are in rupees crores. Now, if I would like to find out the breakup of this, what I need to do is I need to go and look into the notes to accounts. The moment I go and look into the notes to accounts, I find that the revenue has been generated by Reliance Industries in this year from these many activities. The revenue has been generated from these many activities. As we all know that Reliance Industries is a diversified company having interest in wide range of industries, which include oil and gas, petrochemicals, refining, retails. It is also into the new growth areas like solar and wind power and energy, cloud computing, and the data center businesses, the digital media, and things like that. So if you look at the revenue portion, we would find that the total revenue which is mentioned in the income statement comprises of these different types of incomes. This is my income from oil and gas. This is my income from petrochemicals. This is my receipt from refining. This is the retail. This is from retails. And this is the receipt from the other activities. So the first thing that we understand is my income from the regular operational activities. And this we say is my gross revenue. Out of this gross revenue, what I need to do is I need to make the adjustments towards the different taxes, right? Now, as we know that Reliance Industries produces and sells the petroleum products, the company has to pay excise duty on whatever is produced by the company. Similarly, it is into providing services also. Therefore, it is supposed to GST or goods and services taxes, which are applicable on the services that have been provided by this. So if we look at the different types of taxes here, it says during the year it has paid the excise duty of this much, the service tax and other levies. Generally, these are nothing but the components of GST, goods and services tax, which are applicable on the sale and services that you have provided, right? So once I deduct or once I adjust these excise or taxes, what is left with me would be the revenue from the operations, which I would say these are the revenue, which is net of all the expenses related to the taxes, right? Then to this, I need to find out what my other incomes are. So if I look at the other incomes breakup, I have this sheet, which says that my income from dividend is 6,303 crores and interest income is 4,926 crores. What does this mean? This means that Reliance company has many subsidiaries. It has made some investments into these subsidiaries and it has received a dividend from these subsidiaries, right? Similarly, Reliance Industries has some investments in some companies, and also it has some investments in the bank deposits by way of bank deposits or bank balances on which it gets interest income also. Now you need to understand that this amount of 11,229 crores has been shown separately just to find out what my income from regular operating activities is and what my investment or other income is in case of Reliance Industries. This gives us a fair idea as to what are the revenue or what are the receipts that has been generated from the operational activities and what are the revenue which has been generated from the non-operational activities, which are nothing but the interest income and the dividend income, right? Then let's see what the expenses are. The first type of expense which is mentioned in the income statement under the expenses head is the cost of material sold. Now, what is this cost of material sold? It represents the cost of raw materials and the other inputs that Reliance Industries use to produce the goods and services, right? This is nothing but the materials that has been consumed. Look at this now. The raw materials, the utilities, the freight and handling, the other expenses, and the total coming to 391,508. So this is the amount which has been incurred by this towards the materials which have been consumed for making the sale happen or producing the goods. Then you have the purchase of stock in trade. This is nothing but the purchase that you have done. If you remember the earlier class which we talked about the cost of goods sold, there we have said that cost of goods sold is nothing but the opening stock plus purchases minus closing stock. This is your cost of goods sold. Now, in case of Reliance, it is showing purchases separately, which means it must have purchased something in bulk. That is the reason why it is showing this purchase as separately from the cost of goods sold or cost of material consumed. That is the reason why it has been shown separately, right? Just to have more transparency in stating as to what are the different purchases that have been incurred. Then you have operating and direct expenses. If you look at the operating and direct expenses, we find that the expenses which have been incurred are the rent and utilities, the marketing expenses, the other expenses related to operating, and the direct expenses. So these are the expenses which have been incurred by Reliance Industries during the particular year. Then you have a term called as change in inventory of finished goods, work in progress, and stock in trade. And if you look at this amount, this is negative. We need not get confused with this. Negative means your sale during the year was greater than the purchases that you have made. That's it. Or the production during the year. You had some opening stock. You have something purchased or you have produced something. So this year's sale has been greater than the things which have been purchased or which have been produced during the year. That is the reason why this amount is shown in negative terms. This doesn't mean that this doesn't mean that the company is into a negative point, right? Then you have expenses called as the employee benefit expense. What is employee benefit expenses? The salary or benefits given to the employees of the organization are classified under the term employee benefit expenses. Then you have finance costs. What are finance costs? Finance costs are the costs which are incurred in order to generate finance or capital for the organization. The things that are incurred in order to change the capital structure is called as financing activity, and the costs which are incurred towards this financing activities would be called as the finance cost. If you look at this, we find that the cost of debt is 9,000, the cost of equity financing is 3,626. Now what does this mean? This means the company must have raised some equity capital during the year or has taken from some equity shareholders. For that purpose, it must have incurred some advertisement expenses, some printing expenses, things like that, right? Or the brokerage or commission to the providers of capital to them, the mediators. Then you have something called as depreciation and amortization. What is this? This is nothing but the amount of machines or amount of capital expenditure, the portion of capital expenditure which we have used during this year. If you remember in the lecture related to depreciation, we have discussed this at length. We have said that instead of expensing out the whole amount, what we do is we expense out the portion of the item or the capital asset which has been used for the purpose of matching the income of that period with the expense of the same period. So this would be the portion or proportion of the capital asset which have been used during the year. Then you have some other expenses, miscellaneous expenses. Again, you have transfers to or from investments and fixed asset. Now, what is this transfer to or from the investments or fixed asset? Say, for example, what happens? You have an asset which is shown as a current asset or a non-current asset. If you convert this into cash and cash equivalents, there would be an impact on the profitability. So this would be the amount with the expense which has happened on account of transferring this finished goods, transferring to or from the investment and finished goods, right? Now, if you look at the different examples, what can be the various other examples wherein this type of things happen? I would say when a company sells an investment at a gain or loss, this amount would be transferred from investments to your cash. This is transfer from one asset to the other. right? And the other example can be when a company purchases fixed assets at a premium or discount, right? Then the company transferring an intangible asset from one category to another. When a company writes down or writes up an investment which has been used. So these are the various examples wherein the amount has an impact on the profitability also. So it shows this in the income and expense account also as an expense. Then there is no amount which is transferred to capital accounts. So the total expense of this company, Reliance Industries, during the year is this much. To this, what we do is we find out what the tax expenses are. Once we deduct this tax expense, we find out what is called as the profit after tax. But before, obviously, the extraordinary items. What are the extraordinary items? These are the items which do not happen on a regular basis. We need to show this separately because according to the materiality concept, it says all the transactions which are not general nature, which are not of general nature, which do not happen on a repeated basis, are called as exceptional items. We need to show these exceptional items in a different manner. We need to disclose it separately. So we need to show the profit or loss from discontinuing operations. And what are these discontinuing operations? If you remember, in the year 2022-23, the Reliance Industries has declared that it would be closing out some of its units because they were not profitable ones. So it has sold off those units, and on account of selling those units, there was a profit of 1188 crores for the year. So what we do is we add that to this profit. And what we are left with is we are left with the net profit for the year after all the adjustments. All the adjustment means the tax adjustments and the transactions from discontinuing operations. So this would be the profit of Reliance Industries after making all these all these adjustments, right? And if we compare this with the previous year, we come to know that, okay, it has made some profit more than the previous year. So we would say the profitability of Reliance Industries has gone up, and we have a bifurcation of all these, right? So this is how we understand or we find out how a profit and loss account looks like. I repeat, profit and loss account is nothing but a report card which tells you about the profit earned or loss incurred during the year. What we need is three things. One is revenue, one is expenditure. Then the third one is how to write them. What are the rules that we need to follow? All you need to do is write the income on one side, write the expenditure related to generating these expenses on the other. Once I deducted this income with expense, what I am left with is the profit before tax. To this, I have to make two adjustments. One is related to the tax adjustments, and the other one would be related to the the items which are non-regular in nature, which are the items from transactions from discontinuing operations. Since they have been discontinued, we are supposed to show that on a separate manner. Separate disclosure is required, right? So this is how we find out how the company is faring, how the company is doing in terms of profitability. I hope with this discussion, you would be in a position to find out as to how a profit and loss account looks like, or how do we analyze the profitability position of a company using the profit and loss account or the income account, right? Thank you so much.